So I mentioned that Meta is using a lot of these developments internally to improve their business, to expand into new markets. And then looking back longer term, what I have here in the blue is Meta Platforms' return on invested capital going back to 2016. And in the orange, it's the CapEx to revenue ratio. So CapEx to revenue measures how much Meta is spending on capital expenditures divided by its revenue. Okay. And you can see the CapEx to revenue ratio increasing significantly, right? This is what's spooking investors. From 2023, where its CapEx to revenue was 0.2, meaning 20% of revenue was spent on CapEx, increasing to 33% in the most recent trailing 12-month period. And looking ahead, Meta is forecasting even more spending on CapEx, which could increase this ratio further. Artificial intelligence is closely related to the metaverse. The type of things they were spending to develop their metaverse capabilities is similar to the type of things they're investing in to develop their artificial intelligence capabilities. And that's a lot of the computing infrastructure to support the growth of the business. And as part of that metaverse expansion, the company was investing in the hardware, right? The VR headset and the software to support that VR headset and the subsequent products they hope to launch. So this is part of Meta Platforms' ambition to go beyond just the social media platform to get into the hardware business as well. They want to get into that hardware business. They see that as a lucrative category, and they don't like that they're exposed to the risks of being now Meta is trading at a forward PE of 26. And if you took a look at my DCF calculation earlier, you'll notice that it's trading at a significant discount to my intrinsic value per share calculation of $853. Meta stock is trading at $632. So all these things being considered, I see this as an opportunity for long-term investors to scoop up Meta shares at a relative discount. All the while, of course, you are taking a greater risk now with the Meta stock than you were maybe a little while ago when they were not increasing their capital expenditures by such a large amount. But this is a kind of risk that I like to take. And so I'd rather have them take a chance on investing in categories that could deliver great returns. So I'm comfortable with Meta spending this money, and I think investors should be too. Click the link below to watch the full video.